Hello, this is Rich Morrison, and welcome to my latest edition of the Thinking Cap, where today we're going to talk about next week's big reports. We've got two major reports coming out a week from Tuesday, a week from today. We've got a grain stocks report, and we have the important planted acreage report. So, just looking into what we're expecting out of those reports. The grain stocks report is kind of a difficult one because it's really hard to come up with a number. But I also think one of the big things we're looking at out of these stocks reports are the amount of grain that's on farm versus the amount of grain that's off farm storage. And a lot of times that's what's going to determine what basis levels end up doing. And you might get a little hint of that based on what basis levels are already doing in your area. If basis is strengthening kind of counter seasonally, maybe that means there's not a lot of grain on farm, or it just means that farm selling is shut off as of late. And that's certainly the case lately, especially with the markets going down. But here's a snapshot of the one we had back on March the 1st. So you can look at last year's 2025 numbers. You can look at 2026 March 1st numbers. On farm corn at that time, we had 5.4 billion bushels. Off farm in elevators, we had about 3.6 billion bushels. So total grain on hand, about 9 billion bushels. A year ago, we had about 8.1 billion. So that's consistent with how big this crop was this year and the fact that we're carrying a lot more corn. Looking back to last year, June 1, I think it's kind of interesting to see, the percentage of grain that was on or versus off farm, about 2.5 billion bushels on farm versus call it 2.1 billion off farm. Last year, though, one thing that happened, we did not get that rally that we had this year. Last year, if you recall, the market kind of made its high in February and then just trickled down on into late summer. This year, we did have that war-driven spike back in, it started in March, went into April. So I would imagine there's a bigger percentage off farm now than on farm. And so if it's being held off farm, what does that mean? Well, it's being held because elevators can make money on the carry and they can make money holding corn versus moving it. So, kind of also tells you, it's not going to swing, the availability of corn based on what the Board of Trade does because all that corn is hedged. So that's what all things that we're looking for in this stocks report. I also highlighted down below where we were at on wheat at this time a year ago. Only 184,000 million bushels of wheat were on farm at this time a year ago versus 670 off farm. Soybeans, it was a little less than half of the beans were held on farm at this time a year ago. So we'll be looking at all those numbers when we get that report next Tuesday. The other big one is going to be acreage, and this will get talked about a little bit more in the days ahead. People will put out their acreage numbers. What do they think we're going to be seeing? There has been some talk, I think, over the last 2, 3 months that maybe the corn acreage number would come down a smidge, soybeans would come up a little bit based on cost of production. We've had a couple of estimates maybe telling us otherwise. So I want to show you again. These are our stocks matrices. Here's our corn ending stocks matrix. Goes all the way out, shows you ending stock numbers for 2027. So the marketing year runs September 1, 26 through August 31st of 2027. The way my matrix works, we've got over 200 numbers here, potential stocks numbers. We've got yields across the top and acres on the left-hand side. So here on next Tuesday, we'll be primarily looking at acres. You can see USDA currently at 95.338 million acres planted. They forecast we're going to harvest 91.6% of that. We'll wait and see. S&P Global, which used to once upon a time be in Pharma Commodities, they came out with a higher acreage number on corn last week. So a little bit of a shock maybe to the system. The way the matrix works, we're starting out with 2.145 billion bushels of corn. The government's projecting next year we're going to use 16.205 billion, which is down a little bit from this past year. And then coupled with acres times yield, these would be your stocks numbers. The green numbers on this matrix, well, I got one mistake I see, but the green numbers would be above 2 billion bushels. The gray numbers between 1.5 billion and 2 billion, and then the red numbers would be below 1.5 billion. Anything below 1.5 billion starts to get a little tight. Anything between 1.5 billion and 2 billion, just kind of middle of the road. You keep stocks above 2 billion bushels, I think you're bearish in the market. And so that's where we were a year ago up until the time the war started. We'll wait and see. But I drew this, or put the yellow box as basically indicating what we've seen so far from the trade. USDA's current numbers, S&P Global's numbers, some yield numbers from the USDA currently at 183. Cordonier with Pro Farmer, he's using 182. McClure, they're using satellite imagery. They're at 180.8 latest. So this gives you anywhere from about 1750 to over 2 billion bushels of corn, given those different combinations. So we'll update this matrix as we get a little closer, as we get new acreage numbers, and then, of course, once the report comes out on the 30th. But as it sits today, anything over 1.75 billion, there's just not anything here to get the market excited about in corn, even with the yield down to 180.8. So the forecasts all have rain for the most part through most of the corn belt states, maybe a little too much in some areas, but we'll deal with that when the time comes. But as you're heading into 4th of July, it's kind of hard to get the market to rally based on wet weather. In soybeans, similar matrix, S&P Global up about 600,000 acres versus USDA back in, March intentions. You can see what it would do to the ending stocks numbers based on the beginning stocks and based on demand forecast. And you've got some of these numbers creeping down into the red. I've got the red below 250 million bushels. And so kind of tells me that we kind of have to see a pretty good bean yield. Even if you do raise acres up to 85 and a quarter, 85 and a half million, you're going to have to see a pretty good yield here, or we're going to have to see a reduction in export demand. And well, what do you know? We're all sitting here waiting for China to buy beans. And right now, USDA is forecasting next year's demand to be 200 plus million bushels higher, figuring that China is going to be buying this 25 million tons of beans. And so far, we just haven't seen them come to the table. And so that's why the bean market's getting a little itchy, I think, at this point. Been selling off just because we haven't seen that coming out of China at this point in time. So we'll be watching the acreage numbers. And again, I'll update this matrix as we get a little closer. In cotton, haven't seen any other acreage numbers. The government's using 964 right now with a yield at 866, gives you carry out at 3.7 million bales. You can see, the grays between 3 and 4 million bales. And, right now we're not really seeing a lot of concern. I think the crop ratings have been a little on the low side in cotton, but they did creep up a little bit this week, up 3 points into good to excellent ratings. So I've got some different years yields across the top, kind of all over the board. Right now, the 866 would be right in the middle of where we've been over the last 5 years. So as we sit here today, just not anything, again, to get the cotton market fired up. But we'll see what the acreage number is. If they were to reduce it, down to 9.5, 9.4, 9.3, maybe gives this market a little boost. So that's why the report's going to be important next week. So a couple of things to consider ahead of the report from a marketing perspective. If you're concerned about the downside of the market, one thing I would look at maybe is a put option spread. I don't like selling these markets today. I do think they're oversold for the most part, or close to oversold. We are bumping down against some key support, but the indicators are all pretty weak at the moment. So maybe consider a put option spread. If you look over here on the right-hand side, these are the put options. This is our option tree. The at the monies are 440 right now. I looked here today at buying a 19-cent 430 put. That to me is kind of expensive, but I could sell a $4 put, collect 7 cents. Now my net cost is 12. and I have a downside window of support from $4.30 down to $4. What would happen if corn goes below $4? Well, we've got all sorts of things happen then. Your ECO, your SCO, your PLC or ARC, all of those are going to be providing you protection if we go below $4. So that's where I'm willing to sell this put option to the market, collect the 7 cents, and cheapen up the cost of my trade. If I wanted to even cheapen it more, I could turn this into a three-way trade. Maybe I sell a 475 call option up above the market at 12 cents, and now the net cost is zero to me. I've got a 30-cent downside window, and I don't have any risk until we get above 475. If the corn market goes above 475, though, I would essentially have a sale at 475. I think most of us today would probably sell corn at 475, and so that's where this strategy comes into play. But if you're really concerned about downside in the market, this is something to consider. The other thing you might want to look at, if you're not concerned about downside, but you think we're going to get that rally at some time, maybe around the 4th of July or after this report, and you intend to sell the market when it does go up, then courage call options make some sense. A courage call, essentially, you buy the call option now. That way, if corn rallies 20 cents and you're normally scared to sell it, by having the call option already bought and you sell it, if you sell too early and this thing keeps going up, the call is going to make you money. So go back to what we were just looking at. A $5 call right now, 7.75 cents on the December contract. So I could buy those cheap today. If I think we're going to get a 20-cent bump in the market, then at least I got the calls bought. And if I sell too quick and the market keeps going higher, that call is going to gain in value. So a couple of different strategies here. I wanted to mention you can do those on all your crops if you want. I do think corn, beans, wheat, even cotton, probably a little bit oversold at the moment. So I don't want to just go to the market right now and sell or hedge. I think that these types of strategies do make a little sense. So with that, again, June 30th, mark your calendars, 11 a.m. on the 30th. We'll get these reports out. I'll be making my calls that morning with an update on what they had to say, and we'll be talking all about it as well. So with that, thanks for listening to this edition of the Thinking Cap. Take care. We'll talk to you soon.